Hi, I'm April Combs with Class Act Federal Credit Union as a plastic card specialist. I'm here to provide some basic information about credit cards and try and get you all started off on a great foot with your credit journey. Since part of Class Act's mission is to educate both our members and the community alike, we thought that since credit cards are typically a great stepping stone, starting off point for your credit journey, we thought it'd be a great and helpful topic to provide some useful information on. So what exactly is a credit card exactly? Well, a quick Google search will tell you that it's basically a payment card issued to users or cardholders to enable them to pay a merchant for goods or services rendered, based on the cardholder's promise to the card issuer to pay them for the amounts and fees and services agreed upon. It is essentially a line of credit loan that you can pull money off of and pay back as often as you like. Like other loans, there's a finance charge associated with it and terms and conditions that must be met. We will talk about those a little later though. You will be supplied with a plastic card itself, which will likely become the most common way you access the loan and use the money to make purchases. Take cash out, or you can transfer a balance to pay another lender. But with the changing payment landscape, you will find that credit card loans are often used for online transactions, for safety against fraud, and they can also be used now in digital wallets. If you're interested in obtaining a new credit card, we highly recommend that you take the time and to educate yourself on your different credit card options. Make sure to look to your trusted financial partners to make the best decision about your borrowing needs. If you've never had a credit card or loan, or if you've made some credit mistakes in the past and are looking to reestablish your good credit, a good product to start with is a secured credit card. Ask your trusted financial partner if they offer them. What it does is it allows you to make purchases and use your own money as collateral for the loan, so there's little risk to the lender. The secured credit card works just like a normal card. Merchants don't know any different. So what happens is your money is set aside as the security, and you can borrow, make your payments on time, and establish your great credit history. We've had many members use that in the past, and they often come back in a year or so and get that credit card unsecured. So it's a really great stepping stone for your financial history. So here's a few things to keep in mind when shopping for any type of credit card. Annual fees. Many credit cards come with a fee charged annually to carry the card. And while there's absolutely no harm in doing this, it's something you want to know about. There's also non-usage fees. Many credit card lenders charge you for not using your credit card for a certain amount of time. Also look for cash advance and balance transfer fees. At Class Act, our balance transfer and cash advance fee is 1%. Make sure the fees amounts are reasonable. Pay attention to introductory rates. Many lenders use special introductory rates to promote and encourage consumers to take their product. Be mindful and aware of what happens to the interest rate when the introductory rate expires, as it often can increase. Credit card loans are not interest-free, so make sure to familiarize yourself with the APR, which is the annual percentage rate. The APR is the cost of borrowing money against a credit card loan when you don't pay your balance in full each month. Be aware of your minimum payment obligations to ensure that they fit into your monthly budgetary requirements. Late penalties. Late fees for late payments are common, and some lenders may also raise your interest rate when payments are not made in a timely manner. This is also called a default rate. Look out for rewards programs as well. They're very common among credit cards. Many, like Class Act, offer cashback rewards, while other credit cards offer travel, merchandise, or discounts for shopping and restaurants. Just be sure you look at the full picture, because sometimes credit cards that offer exceptional rewards have higher interest rates and fees associated with them. Well, once you're ready to obtain your credit card, you will apply for a credit card the same way you apply for a personal loan or a car loan. Your lender will check your credit and perform a review to make sure that a credit card loan is right for you. Now, let's discuss a few things to be aware of before you start using your card. You will receive a statement each month that explains your minimum payment, your due date, and your balance. It will also show your purchase history for that statement cycle. You will be required to make a payment towards your credit card loan each month. You can pay the balance in full, or you can choose to make the minimum payment or anything above the minimum payment that you choose by the due date. If you pay your purchase balance in full each month, you likely will not pay interest on that money. If you choose to only make your minimum payment requirement, you will be paying towards your remaining balance plus interest on your next statement. Make sure to read your disclosures thoroughly to ensure you fully understand the terms. Choosing to only make your minimum payment will result in your paying your debt over a longer time period, and you will also end up paying additional interest. That $1,000 shopping spree may end up taking a year or more to pay back and will end up costing you even more. It is always in your best interest to pay more than your minimum payment each month or to pay your balance in full whenever possible. So how would the interest be calculated on your $1,000 shopping spree? Your statement will tell you your average daily balance, which is just that, the average balance you had on your account during that statement cycle period. In order to calculate what that money will cost that month if not paid in full, you must calculate your daily interest. Let's say your APR is 13.5%, and to make it easy, your average balance was $1,000. To calculate your average daily interest, you take the APR divided by 365 days. So in our example, we have 13.5% divided by 365 days in a year, which gives us 0.037% per day in daily interest. So then I have my average daily balance multiplied by days in my statement cycle multiplied by daily interest. So again, using our example, we have our average daily balance of $1,000 multiplied by 31 days multiplied by our daily interest of 0.00037 gives us $11.47 in interest charged for that cycle. That means that you will be charged an extra $11.47 that month in interest, and each month the interest will be recalculated and essentially added to your balance. We know that credit cards get a bad reputation, but that isn't always the case. Credit cards are an excellent product to build your credit. Just make sure you keep your balance low to positively impact your credit score. If a higher limit is needed, you can always reach out to your lender of choice for an increase. It is important to keep in mind that credit cards are not for everyone, and it's important to utilize self-control with your credit card usage. Do your research, ask questions, and shop for the best credit card terms and conditions to meet your needs. And hopefully, you will feel more confident obtaining your next or your first credit card.